Samir, welcome to the show. How are you doing today?
I'm doing good, Ayaz. Thank you for having me over.
Well, we've known each other for how long now?
I reckon 15 years, mate.
Is it 15? Wow. Time really does fly, right? I mean, look, at the time when I first met you, I believe you were where? With Principal Global Investor, or you had just joined, right? So that takes it. I had just moved to Singapore at the time. I still remember that. Honestly, this is going to sound like a bit of a compliment, right? One of the few that I'm going to give you today, all right? But out of probably, I don't know, maybe 500 conversations that I probably had with fundraisers in Asia Pacific, you're definitely one of the standouts.
Thank you.
And that's the reason why I brought you to the show, okay? So I really wanted to kind of find out a little bit more about you and let the viewers and the people listening to this podcast hear a little bit more about your story. Number one, just try to find out a little bit about your background, the tips, the tricks, everything that
the secret sauce.
Yeah, the secret sauce. We want people to listen to it because it's educational, number one, right? It's very important that people understand. The reason why we're doing it is because we want people to know that you don't necessarily need to work for a big brand to be able to raise money, right? And there's no one better to tell that story because you've worked with the large, you've worked with the boutiques, you've done it all, right? So maybe just tell us a little bit about your background, how you got here, you know?
Well, I've got to go really way back, you know, in a way I'm giving away my age, but nonetheless, I chanced upon asset management truly by luck. This wasn't so well planned, and I wouldn't say I knew exactly when I came out of my uni that I wanted to become an asset management salesperson. And anybody who says that's what it is.
What was it that you were thinking about doing at the time?
I had no clue, man. I would have been happy to work in McDonald's for, you know. I mean, look, the only thing you're confident of when you're young is you feel you're invincible. I was in Hong Kong, probably one of the best countries for a young person to be and start a career. I was lucky enough to find a job with Franklin Templeton as a junior salesperson, and that's how my career took off.
But why did you try sales first? Like, I mean, because the other guys that I tried like investments or like something else, what was it? How did it happen?
Well, if you're not smart enough, then what do you do? I think it was a function of what I wanted to do, meeting people, engaging. The industry itself, finance as a subject by itself was extremely exciting as well. And to a certain extent, I had a good connect with the clientele in Hong Kong at that point in time. And my career started within the retail universe. So early days, you got to remember in early 90s, the asset management industry was still in its infancy stage. I had the chance to move to Singapore along with Templeton when they set up a office in 1996, if I'm not wrong.
Right.
You'll be surprised to know in those days there were less than 30 mutual funds in Singapore.
Really?
That was it. And today probably in excess of 6,000 or 7,000.
Wow.
So that's how young the industry was, which also meant that the skill sets were limited. The ecosystem was not set up. Singapore was trying to build this ecosystem at that point in time. So anyone who came in with asset management skills obviously was able to contribute very positively to this particular ecosystem that Singapore was proactively building.
Right.
And I guess that's where the journey really started. So Hong Kong, then Singapore, and since then I've been here. So it's been about 25 years. It helps to be a part of the industry for that long because, for a lack of a better word, you're almost a furniture in this industry because you've seen everyone's careers grow along with yours. And the connects and the contacts that you make as a result of that definitely serve you well over a period of time because the people who started in a junior role today are at some very senior key positions. And the connect that you have established with them has been over the years at a very different level than me today calling on one sovereign or one pension.
So if there's like such few mutual funds at the time, probably there were very few salespeople and fundraisers that could do the job, and you probably found that you were one of the very few, right, in Singapore at the time that did that kind of make the climb a lot easier over the years, or was it?
So it's a combination of things. There were limited products, the markets were evolving, and so were the clients, because emerging markets still were, these are early days of emerging market investing. I was lucky to work with some of the best mentors and some of the best brains in this business, and that has been a significant benefit for me, and I've seen this over the last 20, 25 years that it's contributed to my knowledge.
Great. Look, this is interesting. So how, like, you've obviously raised a lot of money. I think you're going to be humble. I know you've done probably over $20 billion, and I know you're going to say it's a team effort and everything, but I really want to know, what is that sales process that one has to go through in order to raise money from institutional clients in the market? Like, how do you, what's been your sort of process, and how do you approach it, right? Like, when you're going to an institute, like, let's just say, I'll give you a bit more clarity perhaps. Maybe you're selling a very difficult, I don't know, fund that's hard to sell, right? And maybe the performance isn't great, and you've joined them because the challenge is really good. How does one kind of approach that and still raise money?
Well, the sales process is pretty simple. You need to love what you do. That's where I would start.
Really?
I really like what I do. And I don't think I would have done anything better than what I do. So that's your starting point. Everything starts there.
Right.
You've got to enjoy even today, after 25 years, I love selling. I love selling asset management.
So the actual will and want and belief in not just the product, but just the love of the game, right?
Absolutely.
I mean, you got to have that.
Once a salesman, always a salesman.
Yeah, I mean,
as they say, right?
Yeah.
So that's one of the most important parts. I think the sales process per se is a very very unique proposition, because in our world, you cannot control the outcome. What you can control is the process by itself, right? If you look at our industry, there are so many moving parts. The markets are very dynamic. Your strategy, your performance of your underlying strategy is very dynamic. You then have the client whose needs are very dynamic. They are ever evolving. You, of course, have to deal with the competition. The market and the strategy that you're selling needs to be within the requirement of that particular client at that particular time. In between all this, you need to make sure that the client picks your strategy. So you have a variety of things which are happening which you can't control. And I often say one thing: control the controllables. Control what you are able to, and not worry too much about what you can't control.
What would you say are the controllables?
Well, the market dynamics is not within your hands. Whether the client is going to select you or not is not within your hands. How your strategy is going to perform is not within your hands. So there are a lot of controllables that actually are not something that you can take charge of. What you can control is your process. And what is that process? The process is having a particular discipline in how you go about your sales structure or sales process. Be systematic, be disciplined, follow it to the T, make very detailed plans in terms of what are you trying to achieve. Short term, medium term, long term. It could be 3 months, 6 months, 9 months, 24 months, whatever they are. Ensure that you have a proper engagement model with your clients. Clients would like to hear from you not only when things are good, but also when things are not so good. That's when you can really add more value to them. So ensure that you have constant engagement. Have proper mechanism of tracking your engagement, whether it be meeting notes, whether it be in some other form that you would like to keep. You should be able to quickly call up all the engagements you've had with your client over the last 12 months. If you've only spoken to him once, let's assume him or her or whoever that is, and you're hoping that in that one conversation, you're going to get the RFP, you're going to fulfill the RFP, and you're going to get the mandate. You're fooling yourself, right? So those engagements are important. You need to be there with your client, know upfront when those RFPs are going to come out. You should be able to contribute and help him understand the business dynamics of the different markets that you are discussing with him. So if he sees you as a valuable partner, by default, the client will reach out to you when the time is right.
Okay.
But it's in your hands to ensure that he finds you as a valuable partner.
Right.
That potential, I think this particular aspect of the sales process is very important. This is something that me as a salesman, I can control this.
I see.
I don't have to depend upon the markets. I don't have to depend upon the performance. I don't have to depend upon whether the client is looking at engaging an external manager. I'm adding value to him. I'm sharing information. I'm putting the right investment people in front of him from time to time. I'm keeping a very systematic report and details on my side. So I'm creating an institutional memory for me to be able to refer to and see what kind of a progress I'm making in my individual sales process. These are the things which are important. If you do these things again and again and again in a disciplined manner, the outcome of this over a period of time is going to be the wins which you would enjoy.
And is that basically your blueprint, like your playbook? This is, you follow this no matter if you're in a big, very well performing fund or a less performing fund. You would use that and it should work, right?
Yeah, it should. I mean, it's your playbook, it's your sandbox, as you may want to call it. There's no rocket science here.
And do you feel like those people that you've met over your career, like you've just spoken about how you've probably been in the industry longer than probably since I was in my nappies, I don't know, maybe, but
I'm not that old.
No, I'm just joking. But it's interesting. Like, do you find that people actually have processes, or do you think how many of them just sort of go in and just sort of sell and just kind of you let the brand work for them, or just kind of just plod along and without any process? I mean, how important do you think it is, and how many people do you think actually have?
So you touched on a very important part on whether the brand does the work for you. Okay. The question worth asking is, and this is a question to whoever's listening, how many of the clients will open the door for you if you're not carrying your business card? They will open the door only for you individually. That's a question worth asking. You'll be surprised. A lot of these doors close once you don't carry the business card of a larger organization. And that is because the whole connect is with the organization that you're working for. It's not with you individually. If you are able to establish the connect at an individual level, at a personal level, then it doesn't matter which card you carry. And I'm proud to say, to a certain extent, the connectivity, the relationships that I've built over the years is with me as an individual. Which card I carry is an afterthought of and an extension of my personality. That is not what my contacts and clients find engaging.
Okay. So look, I remember, you may not remember this, but it was, I think, at least 10 years ago. And I remember, I asked you, like, this, there was, I think it was a role that I was talking to you about, and it was for one of my clients. And you said, well, look, I've got a kind of I think it was an Excel sheet or a file, and you knew when each institutional client was going to be up for an RFP, right? And it was something that you had in your process, right? And that's where it occurred to me that this is something that you've been, working with for how many years, right? So I remember the specific example, you may not remember, but I think you said Bank of Thailand, right? There is a specific period where Bank of Thailand will come out and will do an RFP, right? And you need to know as a salesperson when that's going to come up, right? I guess that goes back into the process that you were just talking about, right?
Sure. So I don't remember taking the name that you just took, so I'm not sure if that was the particular client.
It must have been a different one.
But let me share this with you. Yeah. What I have done over the years is I create a strategy document on every client, especially the key clients. You may not do that for all your clients, but let's say your top 10 or 15 clients. What should the strategy document have? It should have all the connects, all the contacts within the organization. You should have your own flow chart so that you know whom you're connecting with, who are the key people that you have not reached out to. And this is an evolving document, right? It's not a definitive document, because as you get information, some pension funds will put a lot of this information online and you can access it. Not all sovereign funds are going to give you this information. So this is something you will build through the engagements with these individuals that you will speak at different points in time. as you build this document, it starts giving you a good sense of where your sales process is, because it then starts giving you information about asset allocation. It tells you sometimes the managers that you're up against,
Right.
the performance of those existing strategies. If you're lucky, you might find out the price points in certain cases. Information is not necessarily volunteered, but many times it is something that you will pick up through your conversations. But if you then go back and you put it in a very formal document with your goals of what you're trying to achieve, short term, medium term, long term, and the different engagements which you've had, you automatically have created a blueprint for that client where you have a fair bit of information which probably no one else has. It's you who have created it. It's you who have engaged with the client and have managed to get it out of the client. And now this is an important source of information, because based on this, you can start thinking about the various steps one should take. And in that, you may potentially find, okay, they had already engaged with some manager about 2.5 years ago. Maybe the performance is not looking that great. Or they are adding, they've got more capital and they need to add on to a particular manager. And then you know that your timelines, what you're working on, most of the institutional clients will work on a 3-year cycle. And you know where you are in that cycle. And based on that, you decide how you want your engagements to be dialed up or dialed down. And that becomes your de facto rule book.
Okay, that's really interesting. The previous guest we had was Jalil Rashid. If you remember him, he used to work for PNB in Malaysia.
Right.
And he spoke about Malaysia and how to get into Malaysia. And he said that even if you don't have a very well-performing fund, or if it's a boutique and less well-known brand, perhaps, one of the most important things that he mentioned was knowledge transfer, right? And I think you've touched on it just now as well, about how you kind of communicate to the client, how you're going to help their, by sending an intern there and or taking one of their interns into your platform to get to know the fund better and just really updating them on what's going on. What would be your sort of secret sauce, if I can put it like that? Like, what do you think is the key things that one has to remember now, right? If in order to kind of, let's say if it's an average salesperson listening out there who has just entered their career and is trying to figure things out and perhaps hasn't got that process locked down, right? And hasn't got that what is it, the USB stick in, so to speak, metaphorically. What do you think is going to be that secret sauce?
It's not very difficult. I can sum it up in 3 alphabets, my friend. KYC.
Okay.
Know your client.
Okay.
It's as simple as that. If you have enough information about your client, which means if you've done enough due diligence, if you have engaged and you have been meticulous about the information that you've been able to get out of your client, you have the secret sauce, because you know what the gaps are. And then you are very, very well positioned to then bring the right strategies, right products, right investment professionals in front of him to add value to the client. That's what clients are looking for. It is important to understand when you are dealing with institutions and larger clients, these people are very sophisticated. Right. They have deep knowledge of the markets. They have deep understanding of the investment process. If you are not sufficiently engaged with them and not providing them value, you're not going to get a second meeting. So it's for you to do your homework and know your client well before you engage. So do your homework. Don't just land up over there. One of the simplest thing that I have learned over the years, before going into any meeting, literally take 2 minutes, close your eyes, and think to yourself, what are you trying to achieve from this meeting? What is the outcome that you desire from this meeting? And then get into the meeting. You will see your whole approach will change, because you've thought through what you're trying to do there. That person has committed his time or her time to you. Make sure you use it to your advantage. Don't go there and ramble on about something which is inconsequential, because you wasted that person's time, you wasted your time, and you wasted a golden opportunity to know more about your client.
Interesting. Do you feel that there's a lot of people out there that kind of rush in a conference, I mean, and grab their business card and just go for the kill and have verbal diarrhea and just get so excited? I mean, I'm sure you've probably been there in the early days, right? I mean, when you...
Well, I wouldn't say there are many people there, but I would like to put it in this manner. Yeah. There are many people who would say, I know Sovereign Wealth Fund 1, I know Pension Fund 2, I know Family Office 3. Question is, do they know you? Right. That is important. The day they say, we know this guy, and he's a good guy, more than half of your job is done. Because when that RFP comes out, you will be one of the first ones to get it. And that's where the battle gets won. If you're not even getting the RFPs and RFIs, you're not even in the game, my friend.
Really?
That's the bare minimum you need. And for that, you need to establish a personal connect and add value to the relationship. That can only be done by the individual, not by the firm. And that's something that everyone should remember always.
Let's say if that was me, right? I mean, I'll be sort of focused on, okay, before I go to that meeting, I'll make sure that I've done enough research on that. For, let's say it's a pension fund, there'll be lots of things that are publicly available. If it's not, try to figure it out by networking, speaking to other people in the industry, research, get to know the background before you go to that meeting. Then let's say you're in the meeting, you're now pitching, you're talking about your product. Perhaps you don't go in for the hard kill. You probably just let them know, hey, this is what we do. And then these, like you said, the battle is only 50% of the battle is won, right? And then the remainder, I guess, is like a 3 or 4 year game plan. I mean, this is, so in those meetings, I mean, how many meetings would one have to take? Let's say about 5, maybe 10. How many?
So let me give you an analogy. Yeah. What we say in our world is we do elephant hunting. Now, the question you're asking me is how many bullets I need to bring an elephant down.
Yeah, basically, yeah.
It depends where you're hitting him. Okay. In today's world, and if PETA is hearing it, they won't be happy with saying that elephant needs to be brought down. But what we are essentially trying to do is catch an elephant. So let's say than shooting bullets, how many nets we need to catch him, right? There's no perfect way of doing this. It is about how much value you bring to your conversation with that client. It could be done in 2 meetings. It could be done in 3 meetings. It is important that you have a consistent rapport and a consistent communication with your client. And that, whether it's over a period of every quarterly, every monthly, that's up to you. That's the relationship you bring. And that's where your different facets of your personality comes into play. Maybe you're a sportsman, maybe you're a musician. Yeah. Engage with your clients in different aspects of life. It doesn't only have to be work. Find some commonality which gives you a reason to engage with that client. Yeah. Could be golf, could be tennis, could be soccer, could be...
Have you played that card? I know you're a musician.
I haven't played the card. I didn't need to. But yeah, I do play the guitar.
Yeah. So has that ever broken like the ice when it normally...
Oh yeah, many times. And it feels good when the client says, I've been to your concert before saying...
So these guys actually turn up to your conference and then what? They remember you from that, or they go after they know you and then they turn up to the conference? Like how?
Let me correct you. They may not turn up for my conference, but they do turn up for my concert.
Sorry, yeah.
Yes, they have. In some cases, through friends and family, they've heard and they've come and they've liked, and that's been a great icebreaker, I would say. It helps. It helps.
Okay. I can imagine that working in all aspects of sales, right? So it's really important to have a different talking point.
Yeah,
aside from just always talking about work and sort of getting to know them so that you can break that ice for when it really matters, right?
Indeed. I mean, look, you're a great salesman yourself, right? And we've seen each other from close quarters.
I only learned from you, though.
Oh, yeah, right. Of all the things, this is the only thing you learned. Okay. Look, I firmly believe there are few traits which make a good and probably a successful salesman, right? And if I have to really outline them, I think conviction is one of the most important. You got to believe in yourself. That's probably the more. If you don't have high conviction, this is not a job for you. So that's number one.
Belief in yourself or the product, or
no? So first, belief in yourself. Let's start there.
Okay.
Then you believe in your product or what you're trying to sell.
Okay.
So that goes hand in hand, right? So these aspects are very important. You then go to confidence. So having conviction is one aspect, then having confidence of being able to take this. And the confidence comes through the conviction. So they are interlinked to a certain extent. Perseverance. I mean, I can't stress, you got to be like a dog with a bone, my friend. Once you latch on to the ankle, you cannot let go. And you've got to be very regimental about your perseverance. You've got to be at it day in and day out, because this is a lengthy process, especially institutional marketing is a 2-year, 3-year kind of a process. So if you are disillusioned or discouraged, all you're doing really is missing out on an opportunity, because you never know when that RFP is going to come in. Right. And you've got to be there. So be very, very systematic. That's the discipline aspect when I say systematic. And it all boils down back to having your notes, having your structure, having your engagements, all documented, put in properly, followed meticulously. That will make you a better person. Last but not the least, every salesperson needs to have optimism. You've got to be an optimist. All salesperson will look at a glass and say it's half full. Very rarely we are going to say half empty.
Yeah.
Because we are working on the presumption that things are going to be good and our services are going to be required.
Without that, we die, right?
Exactly. So that's a prerequisite of our skill set.
Yeah.
You have these conditions, or rather you have these qualities, and there is a high chance you're going to succeed. It's as simple as that.
I mean, the qualities you've just mentioned are very personal, related, right? So it sounds like what you're saying is that it's all in your mind, right? And it's all in you as a salesperson.
Yeah.
The fact that if somebody is not able to raise money, let's say they've worked for 3 or 4 years for a fund, there's a chance that fund just sucked, right? And it just wasn't that good. But from your experience, would you say that probably 50% of it was just the wrong person who was trying to sell that product? And how would you kind of analyze, because you can't put it down to just one situation, but you've seen this story pan out, right? You've seen CVs of people come in and you ask them, hey, how much money you raise? And then it's like, they didn't really raise it, or someone else raised it, or they just didn't have those qualities that you mentioned, right? I mean,
it's not that difficult. As a successful salesperson, what I would like to see is, before I would say yes to any job, if a job comes, if a good role comes my way, the easiest way to look at it is try and matchmake yourself. Your capability, the potential company which is hiring you, look at the underlying capability, look at the platform, look at the investment pedigree, look at the investment team.
Yeah.
Try matching it with what you have, right? And the answer is somewhere there. You'll find it. I'll give you one example.
Yeah.
One of the firms which I've worked for, obviously great pedigree, great capability. But it was very evident that as a single country boutique manager, that will never find any purchase with most of the central banks in the region, because central banks typically tend to shy away, A, from equity market investing, B, from single country equity emerging markets. It even makes it very difficult. I'm not saying there aren't some who don't do it, but out of 10, I would say 9 wouldn't even go in that direction, because central bank's objective is very different. It's capital preservation.
Right.
They are protecting the nation's wealth. They're the custodian of nation's wealth. They're not in the business of making money, right? So it's a different objective. Naturally, their investment requirements are also guided by that objective. Now, if you're a seasoned salesperson, you should be able to quickly anticipate and understand the product that you have in hand.
Know your client, right?
Potentially, exactly, is not potentially going to match up with some of those clients. So then do you have a universe big enough that you can bring something to the table? And therein lies the answer. If you do this qualifying process yourself, there's a slim chance of failure. Yeah. There's a high chance that you would succeed, is what I would like to believe.
So you've sold pretty much every product out there, right? I mean,
I've been hired and I've been fired many times, my friend.
Yeah. So I look, you've sold what? Equities, fixed income, ETFs, real estate, private equity, whatever, right? What do you think is the most in thing at the moment when you go and speak to your investors? What kind of products are they asking for, and where do you think the opportunities lie in the current market landscape?
Well, look, we are in a very interesting time because the plethora of products that you see today didn't exist about 20 years ago when I started out in the industry. So from that perspective, it's a bouquet of products which you could take to the client. The question is which of those strategies are relevant to your clients and what are some of those capabilities that you as a firm are good at, right? In our particular business, you are going to be binded by the product suite that you carry. And many a times you're going to miss out on the opportunity because not every client is going to buy that particular capability which you have. So it's difficult to pinpoint what is the requirement of every client because it differs. It differs whether you're a sovereign, it differs if you're a central bank, a single family office, a multi-family office, just an ultra high net worth individual or a distributing arm of a global bank or a private bank, right? So everyone's needs are different. There's enough over there, both from a product perspective and from asset raising perspective. You have to do yourself a favor and figure out what works for you.
Let's say any strategy out there, as long as it's half decent. If you're a solid salesperson and have those attributes that you spoke about earlier, you know your client, you're you know, what was it? You're perseverant, you know, you really go for it. It's all the mindset. That person should be able to raise money based on the principles you mentioned earlier. There's so much out there, right? It doesn't really matter what you have in your sack, right? It's just how you approach it, how you get to know your landscape, who's going to be interested in that product, and actually going after them and building relationships with them.
Yeah, I mean, I wouldn't say half decent. I would say if you have a top decile product,
really,
you will be able to sell. You will find success if you're disciplined and if you follow the basic principles of sales. There's no reason why you can't be successful. Many people give up because success takes time. This is a marathon. This is not a 100-meter sprint. So you need the tenacity and you need that discipline to stick to your goals and have that conviction to do this day in and day out. It also talks a little bit about whether the firm has the patience. So gauge that when you engage. Is the firm willing to commit those 2-3 years? If they are looking short term, they're setting you up for failure, right? Especially when you're going after institutional mandates. You need a 3-year, 4-year kind of runway. So it's a combination of things. There's not just one answer to this question. You need a reasonable product suite. You need a good employer, or rather you need a good firm which can provide you that platform. And you need your own discipline and sales technique to make this a success.
Based on your experience then, with all the various products that are out in the market, obviously there's nuances between different countries, right? Like what you would do and say in Malaysia might be very different to what you would do and say in the Middle East versus Brunei, Malaysia, China. And are there any things that you can tell us about how one needs to approach each market? For example, let's compare your success that you've had in Middle East or in perhaps in Southeast Asia. What are the different things that you have to remember based on the countries you're selling in?
Sure. I think the risk appetite in different markets and different countries is unique. Certain clients have certain risk appetites. I wouldn't say there's a significant difference between these markets. What is different is the risk appetite, the asset classes, the comfort of certain asset classes. You'll see alternatives, real estate in this part of the world, in Southeast Asia or even in North Asia, has been around for a very, very long time. Core asset classes, allocation to US is always a given, irrespective of which markets you are operating in. Something like China equities has a far superior acceptance in Southeast Asia, North Asia. Something like Indian equities has a better acceptance in Middle East. It's just the demographics, it's just the comfort of those markets which makes it easier. There's no real logic in what is better or what is worse. It's a question of what kind of allocation you want to do and the comfort you have with the risk on the
What
table.
about like, so if I was to deep dive and double click that, what are the cultural nuances that you have to be aware of? I sort of touched on this with Jalil, right? And on my last episode. And he said something really interesting. And I don't know if you could kind of comment on that or if you've seen it from your personal experience. He said something like, if you go to Malaysia and you go directly to the CEO, you're gonna burn a few bridges. You have to go like a bit lower, but whereas in Indonesia, you have to go to the top guy first in order to do that. Are there any nuances that you've seen similar to that in the markets that you've operated, like for example in Middle East or in Singapore or anywhere in Asia, or do you feel that that's not been such a prominent
Yeah, I
point?
would struggle to say I've found something of that to that an extent. But let me tell you one thing.
Mm.
In the chain of command, nobody is less important. You need everyone on your side for you to have the best chance of closing. That means the person who is responsible for collecting those RFPs and distributing those RFPs to the upmost decision maker, to the investment team, which is going, the investment committee, which is going to select you. You need a buy-in. The more people give you the buy-in, the better chances of closing, right? And getting that business. So why limit yourself to only a few people? I would say go through the whole chain. That's helped me. That has helped my cause. I have engaged, and yeah, the level of engagement will vary. The context of engagement will vary with the different people, but no one is less important. You've got to make sure that you cover the full chain of command.
Have you seen that sort of play out in asset management, particularly in the global firms where you can hire like maybe, quite a lot of salespeople versus like a boutique where you can't, right? So for example, in the larger boutiques, they'll have an associate that will be talking to somebody at associate level. They have a VP that might talk to somebody at a VP level in the sovereign wealth fund, and then there'll be like a CEO or an MD that will talk at a really high level. When you're like a smaller fund, right, and there's just a bunch of I don't know, let's say it's a boutique, for example, then there might be a lot less of you, right? So can you still build that depth, and how does it work?
Depth is built through individual relationships, the product that you carry, the capability of your firm. Not so much about who you connect with. It's to each individual to make those connections and engage with those people. No, I don't think it's a showstopper. If you have more people, and global players tend to do that because the teams are slightly bigger, but the product suite and the capabilities that they bring to the table is also fairly large.
Yeah.
A boutique manager will have very limited and bespoke capabilities to offer, so you don't need an army to be taking that through. You always have the luxury of falling back on your senior investment professionals and some other market specialists to come and help you out with. But no, I don't think that should matter realistically, because your product suite will dictate the kind of efforts that are required to make that happen, in my belief.
Okay, we're seeing we're sort of approaching the end of this session, and obviously thanks very much for your time. But one more question before you may go. It's just more of a thought leadership sort of question. You've entered the industry, 30 mutual funds in Asia. Now it's like thousands, right? How do you see the industry evolving going forwards? Not just sort of sales, but in just general. There's lots of things happening. You have AI, and you have robo advisors. You have clients that are building their own capabilities in house, and then there's obviously the big firms like if you look at BlackRock, they probably have every single fund available to them out there. Every strategy, they probably got it. And so all of these things, I know some of them have already been there, some of them are developing. What's your sort of view on how things are going to look maybe in 10 years' time, particularly in Southeast Asia?
I hope I had a crystal ball and that would give me a lot of answers. You've got a big question over here.
Yeah.
But let me tell you a couple of things, right? I mean, sure, the robo-advisory is becoming more and more important. But the fact remains that institutionals still rely on a deep due diligence. They're not going to deploy $500 million based on algos. It doesn't happen, right? So good salespeople will always remain relevant to the ecosystem, number one. Number two, in terms of what is changing and some of the bigger changes, I think the boutique managers are gaining far better traction than they did probably, say, 10, 15 years ago. I myself have witnessed this when certain pension funds who are slowly moving towards increasing allocation to emerging markets or single countries, right? Um, Today want to deal with the best manager onshore in that single country. If a pension fund number one wants to invest in Brazilian equities, then they want the best Brazilian manager onshore in Sao Paulo. They don't want it to be run out of Hong Kong, Singapore, or London, or those places. Because, look, emerging markets offer unique opportunities, and it's a proven testament, right?
So there could be a move towards more boutiques.
There is definitely happening. That
It's
is
already
happening
taking
because they are
away from the global players. So
especially in emerging market universe and single country universe, because emerging markets are very inefficient, and those inefficiencies can be exploited by people on the ground. So boutique managers pride themselves to be alpha generating managers,
okay.
and their ability has been proven time after time in terms of what they bring to the table. And I think clients are recognizing that. But that doesn't mean global managers won't be in play. They are. I mean, just the breadth of products that they offer, the amount of services that they offer, they're important when you're going and engaging for a core manager in the US. Some of these global managers are one of the best organization to work with.
Great. Well, listen, thanks very much, Samir. I learn a lot, right? I always do, but it's just always a pleasure to sit with you, and you've given an hour almost, and I think a lot of our viewers will be intrigued, I'm sure. Are you okay if any of them reached out to you over LinkedIn, or if you're okay with the email address, we can put it somewhere
Absolutely.
below.
Always happy to help.
Yeah, I think there's a lot of people that out there that don't have access to this kind of information, bite-sized in an hour, where you can kind of put down everything. And I would hope that if there are listeners out there that want to, find out a bit more, please do reach out. We can always connect you to any of our speakers, and obviously, I'm sure you'll be interested to talk to them as well and learn. After all, we can all learn from each other, and this platform is purely educational. So thank you very much, Samir, for coming down, and I guess there'll be a part 2, hopefully, because there's more things to talk about.
Never
right?
say never, and thank you for having me over, Ayaz.
Yes.
It was a pleasure speaking to you, my friend.
Yes, great. Thank you very much.
Cheers.
Nice one.
Bye.
Thank you.